Happy Friday. I am really excited because we're going to talk about one of my very favorite subjects today. We are going to talk about paying for long term care. And I'm really happy because Norm Janis from New York Life is here to help us understand how we can pay for long term care without breaking the bank. Or many people say it's too late, I can't buy long term care. So, Norm, welcome.
Hi,
Enlighten
Betsy.
us.
Thanks for having me on, and happy Friday, everybody.
Yes. So tell me, what do I do? I'm 70 and I'm all of a sudden realizing, this care I may need is going to cost me a lot of money. And I didn't buy long term care when I was 40.
Okay,
Am
great
I
question. So,
out of luck?
no, you're not out of luck. So, age 70, you can still buy traditional long-term care insurance. Obviously, as you get older, the price is going to go higher. But the main obstacle that you have in your way is what? Your health. So, those are age 70 and older who may not be perfect. There are alternative ways to fund for long-term care. And there's a number of them, and it's a discussion with the clients and see which fits best for you. So a couple of ways that we talk to our clients about is as we get older. So now we talk to clients about a couple of things. One, do you have any old life insurance policies that may be sitting out there that you really don't need the death benefit, or the kids are grown or they're out of the house and it's a cash value life insurance policy that you really don't have much need for the cash value. But now you can use that cash value and move it into a hybrid product and build a long-term care plan based on a single premium payment. Very popular today. It's not a no-lose product if you never need it, and I hope you never do. There's a death benefit that goes back to the beneficiaries, so the money's not wasted. There's a long-term care pool of money available if you need into the future need long-term care, and the odds
Okay.
are that you will.
Yeah. Statistically,
Second
we
way
probably
is
know that. Yeah.
yeah, I hate to throw statistics out, but at the age of 65, there's a 70% chance you'll have a long-term care event in your lifetime. How significant? I don't know, but those are pretty good odds you're gonna need some sort of care.
Okay. Another way, annuities maybe, or what am I hearing
Sure,
about that?
annuities. Yep, annuities, great products. We pivot to those quite a bit, especially if clients have health issues. So generally, the underwriting guidelines for the annuities are less strict than with traditional long-term care or life insurance with chronic care riders. It can be a single premium payment. So now we're looking at an asset-based product versus long-term care is premium financed. This is asset finance. So you take some of your assets, you can single pay one-time payment into a product, annuity that will grow. They'll have an inflation rider that will grow with you. So the pool of money will increase, which is important. Somebody might say, well, I can't do a single pay. Can I do a multi-pay? Some products you can. You can pay it over the course of 5 years, 10 years, stretch out the payments a little bit to make it easier on the budget. But now you still have a long-term care pool of money that's available to you if you need it. What's important about these long-term care products, which people seem to forget or don't know, is the pool of money inside long-term care is tax free. So the argument becomes, well, I can self do this on my own. I can self fund this. You need to get to a pool of money, take the taxes out to get to my number, which is tax free. And that's extremely difficult and even sometimes impossible to duplicate. So the annuities are a great choice. Again, as I mentioned, the underwriting is less strict. There are some products that are guaranteed issue. So a client that may have some assets but has significant health issues, we can still find a product for them.
So just clarify for me, what do you mean assets? So I got to sell my house to put in this annuity, or what's going in there as for someone's assets?
No, sure. No, we're not looking for you to sell your home. That would not be a wise choice. But someone has money sitting in a, again, cash value life insurance, or you have money sitting in a bank account, lazy money that's not doing much. Today it's earning a little bit of interest, sure, but to take a sliver of that asset and move it into a product that's going to have a long-term care pool of money for you is a powerful product. So you're not selling the house. Again, lazy monies, CDs, cash, savings account, things that just aren't really doing that you really don't need at this point to take on and pay for your everyday expenses.
So
And now you can use it for long-term care.
you can't use money that would
No,
be in your IRA or your 401k. Can you use that money?
not advisable. Not
Okay.
advisable.
What about how much money are we talking about? Do people have to have hundreds of thousands of dollars lying around to fund these or
Sure. Then it's a discussion with the clients of what assets they have, how much of the risk do you want to take off of the table, and let the insurance company pay for it. So cost of care anywhere from $3,000 to $12,000 a month if you need care. How much of that risk do you want to give the insurance company? And that can be based upon what your affordability, what your assets are, and how much you could possibly self fund on your own, and then transfer the rest of it to the insurance company. So it's a conversation with a client. Not everybody's the same. It's not a generic solution.
okay.
It's a
But
multiple
I,
questions.
I guess what
It's
I'm
fact
trying to
finding. It's
get at
worth important to them.
is this for really wealthy people or can an average person, are your clients like super wealthy or, I know you sell traditional long-term care policies to
Sure.
older people, but I'm assuming they're very expensive. I'm not sure.
It's clients of all wealth. We can find a product if somebody has, you know, $50,000 they can deposit, or they can do 10,000 a year for 5 years. Again,
Okay.
the importance here is understanding is to take some of the risk off the table to whatever you can afford to do. Transfer
Okay.
some of that risk to the insurance company and take that burden off of you, your assets, and your family, whatever
Okay.
that
So
number is.
so if
Everybody's
you're
different.
talking about 10,000, you don't have to be a billionaire, if you do it over 5
No, no,
years
of course not.
and
If you're a
and
billionaire, you probably don't need to be talking to me. That's for sure.
right.
Not for long term care anyway.
Right, 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 right. But 10,000 is not a crazy, it's not crazy money. If for 5 years.
No, it's
And
not
then
crazy money.
go ahead.
So 10,000,
So
not
my
crazy
question was,
money. Go ahead.
yeah, well, what I'm hearing too is you put that 50,000 in there. Is there a premium every year or you just put that 50,000 in there? Do you have to pay a
Again,
premium on top
different
of that?
products for different people. You can 50,000 single pay. If we're going to use 50,000 as a number, we can do 50,000 single pay. If you have the affordability to do more, maybe you do 50,000 a year for 5 years, or if 50,000 is your total number, but you can't do 50 at one time, do 10,000 a year for 5 years.
So, but you're just putting the money in this annuity. You're not paying a premium on top of that the way you are with a long-term care traditional.
Correct. Correct.
Okay.
Correct.
Okay.
And
All
in
right.
the
So that,
policies like these annuities and hybrids, your premiums are guaranteed never to go up.
okay. But there
One
are
time. If the one
premiums?
time premium, that's it. Well,
Okay.
with long term care, there's premiums. You pay ongoing premiums. Those premiums could go up. With the
And they do.
hybrids or the annuities, there's no additional premium on top of your deposits.
Okay, so that's important because that's a big difference. I mean, these traditional long-term care products, um, they cost a lot of money. Do you advise people maybe they have a long-term product, but they're concerned that what they bought, maybe they need a little more. So they could supplement with another product.
It's a great point, and like I talk about people all day long about this. Just had a conversation yesterday about it. Some people have a supplemental policy. They bought it years ago. It's not enough based upon what cost of care. They have something. You don't want to get rid of it because why? You're older now. Your health may have changed. You're not going to duplicate it, but what you have is not enough. So now we supplement it. And now we look at the annuities, or we look at maybe the hybrid products to add on to what you already have for peace of mind.
Right. So it'll give you a little extra. And again, you said these are tax free. This is tax free. Obviously, you paid tax when you earned it, but when it's sitting in there, you're not going to pay taxes on the money as it grows, I'm assuming. You
Use
pay,
the money for long-term care. Long-term care funds are tax-free if you use it for
okay.
long-term care.
Okay. Okay. So you can take it out and you're not going to pay,
If
like you
if you
would.
use it for long-term care, that's key. That's key to know. If you use it
Yes.
for long-term care,
Right. If you, and maybe we're getting in the weeds here, but um, there's probably a death. You'll have to talk to your accountant about how you handle the beneficiary for that, because there is a beneficiary on the annuity, correct?
that's correct. So that's a
Okay.
conversation with clients. That benefits are generally tax-free, but we'll talk to clients. It's a one-on-one conversation. The only thing that's taxable in the annuities is if there's a growth factor and you take out the money to collapse the policy, you will pay tax on the growth.
Right, right, right. Okay. But if you're taking out the money to pay for your long-term care, you're not paying on that growth. So that's a big benefit to people.
Yeah.
Um,
Yeah, it's huge.
which is good, because you want it to grow, but then you don't want to have to pay half of that growth in taxes, because now you're able to use all of that money for your care. So
You
that's
got it.
that's that's a good thing. Um,
You got it.
And as opposed to if you have a long-term care policy, what I'll call a traditional policy, I could pay in that till I'm 100 and I could pass away and never use it. And there's no residual. It's just gone. There's no, there's no beneficiary. There's nothing to
Well,
leave my children.
we'll say that with an asterisk because some policies do have a rider, legacy rider, that if
Oh,
you've never
okay.
used it, the premiums will go back to the beneficiaries. It's expensive. You can put it on there to add it on, sure.
Hmm.
But again, that's long-term care. Generally, if you don't use it,
You're
it's
lucky.
insurance, just like a homeowner's insurance, right? If your house ever
Right.
burns down, there's nothing back to you. It's insurance.
That's right. That's right. And none of us want to really have to use our insurance. I'm going to say that
Like I
here
like
and
I tell my
now.
clients, oh yeah, I tell my clients all the time. I hope this is the biggest waste of money you ever spend because you've lived a
That's
long,
right.
healthy life and you haven't needed it, and good for you.
Yeah, and good for you. Exactly, exactly. Because I know there's a saying in the insurance business. It's always too expensive until you need it, and then it's never enough. So
You bingo, exactly. Yeah.
so
And
that's
there's people have heard me say this 100 times. Three things work against you in my business: father time, your health. My stuff never goes on sale.
right. That's right. It is what it is, and it's hard for people to take a look at this and buy in. I think as Americans, and I know I'm generalizing, but we like to think it's never going to happen to me. Um, but it's likely. The good news is if it does happen to you, because that means you weren't hit by a bus and you lived
Nice.
uh, a nice long life. So that's great.
You hope it
Well,
never happens to you until it does, and when it does, it's too late. So waiting never
and I would
works. Procrastination
I
doesn't
would
work in my business.
encourage everyone to at least have a conversation with Norm or whomever they deal with, to at least have the conversation, because you don't know what you don't know until you need to know it, and you didn't know it. So please try and take care of, and it's a gift to give your children as well. Um, you know, if you have that long-term care or something to help, it helps ease the burden for the children moving forward. So,
You hit it again, but you're right on the head. You never want your family members to be caregivers. That's just a very bad plan. Never have
right.
family be caregivers.
Right. You don't want them giving the care, and you don't want to have to go to them and ask them to pay for the care. So this sort of helps with that whole situation. Well,
It
Norm,
helps your
thank
family
you.
manage the care, which is what you want.
Absolutely, absolutely. It's, you know, whatever can help can help. So, and I need to throw this in. Medicare does not pay for long-term care at all. So everybody should
Correct. Well,
know that.
Medicare will not pay for unskilled care at home. What Medicare will pay for is after a 3-night stay in a Medicare facility, as long as you have rehabbing, rehabilitation, Medicare will pay for the first 100 days. Once rehab stops and you don't need skilled care, if you go back home, it's not going to pay for it. And even at 100 days, that's not a long time for care.
Yeah, right. You get 100 days. And if you need more than 100
That's it.
days, that's it. And
That's it.
it's not $40 a day. I think the last client I had was quoting me, I don't know, $400 a day. Does that sound? I mean, it's a lot. So you
For
do
care, it
not
could be.
yeah, you know, it's several $100s a day. So
Yeah, could be. Sure.
right. And it is not like being at the Ritz-Carlton. So it's really important that you do take a look at this. So, well, thank you, Norm. You have been great. And like I said, if anybody needs to reach Norm, I did put his phone number. We've got his information on my sites and my website, my YouTube channel, Facebook, Instagram, everywhere. And everybody, please have a great, safe weekend. Thank you, Norm.
Exactly. Betsy, thank you. Thank Betsy. Appreciate it. Everybody have a great weekend.
Thanks.